What's good, man? Welcome back to Joe Rich Trades and Stocks. We spilling all the info that they don't want you to know. And I know we ain't posted a video on here in about 2 weeks, man. Coach had to take a little mental break, but we back, you hear me? And today I want to talk about how me and the Discord was able to run some racks up off the stock market last week while day trading. I want to tell y'all our rationale as to getting into these trades and selling these trades. And I also want to give y'all 2 specific stocks to 10x your money by the middle of 2025, man. So without further ado, let's get into it. So for my learners that's new to trading options with Joe Rich Trades, I want y'all to understand 3 key things that you need to get down pat before even starting or thinking about day trading. This is support, resistance, and key levels, man. And I'm about to pull the chart up and show y'all what all 3 of these mean. You understand what I'm saying? So the easiest way to identify these 3 key concepts that I just named, which is support, resistance, and key levels, is TradingView, man. You have to download TradingView so you can understand these charts and what the stock is doing. TradingView shows you candlesticks and more factors in the market versus just looking at a linear line going up and down on Robinhood, man. So keep that in mind. Make sure y'all download TradingView and pull out y'all notepad so y'all can take notes. So I'm gonna start screen recording on my iPad so y'all can follow along with me, man. And first things first, man, what is support by definition? By definition, support in the stock market is a price level where the demand is strong enough to prevent a stock price from falling further. You understand what I'm saying? Now, what does this mean in layman's terms, man, in simpler terms? All this means is the price point of the stock where the buyers are not letting the stock fall under, you feel me? It gets to this point, then runs right back up or bounces off of it. You understand what I'm saying? Now, the same thing applies to resistance, but resistance is the ceiling. So support and resistance. Resistance is the ceiling, support is the floor. Resistance is where the stock price keeps running up to, only for the sellers to keep smacking it down. You understand what I'm saying? So just keep that in mind. Yo. The reason it's so important to be able to identify support and resistance is because 9 times out of 10, when these certain levels get broken and held, there's opportunities presented to make a buku abundance of money in the stock market with trading options. And I'm gonna show you what I'm saying when we hop on TradingView and I show you these examples. Just keep this in mind. Now, what is a key level in the stock market? A key level doesn't have to necessarily be support and resistance. This is just a level in the market where the market sees a big reaction at, whether it's pullbacks or a lot of consolidation. You understand what I'm saying? But this might not be the exact floor or roof that the stock keeps going to, man, otherwise known as support and resistance. You get what I'm saying? So let's hop into the charts. Now, there's a couple ways you can play supply and demand or support and resistance in the stock market. But today I want to talk about bounce and rejection plays, and I want to talk about break and retesting plays, man. So pull out y'all trading views, pull out y'all notepads, man. And now we're looking at SPY on this day. Imagine this side wasn't here, right? This little pre-markets wasn't here, man. And we're doing our nightly analysis for the stock market for the next day. And we can see, okay, this 570, 571 area held is good support. Every time it hit it, it gave these little wicks, man, which are known as rejection candles. You understand what I'm saying? It's getting to that price point and it's getting brought right back up. The buyers are holding that level like the definition said, man. So now we see resistance is up here. It's not getting nowhere higher than this. And every time it gets there, the sell-off pressure is crazy, man, at this 575 area, right? So boom, we're looking at a play for the following day over here, right? So we could say, okay, and pre-markets is still holding it. We're looking at this in pre-markets is still holding the support, right? But as it breaks it and comes down, right off market opens, we can hop in puts right here, man. And on 0-date contracts, this would be at least a 30% gain. You understand what I'm saying? Almost $2 move down on SPY would actually be at least a 40% gain, man. So we could quick snipe it, boom, enter right here. Let me pull up the forecast. You can go to your, or matter of fact, I don't want to pull up a short position right now because it's going to pop up all of my other drawings on spot. But you could enter right here, man, sell it after you see signs of rejection, man, for a quick scalp. Or y'all see how it wound up faking out and coming right back up to this level, man. You could have been patient and more conservatively style traded and waited till it ran back up and then went to break this again, because you see after it broke this little price point again, man, the sellers came in heavy and the buyers could not keep it up anymore. So instead of having this little quick gain right here, you could have caught an 100%er on spot intraday, just staying patient. You understand what I'm saying? When it comes to trading options, especially on volatile stocks and ETFs like ticker symbol SPY, it doesn't take a $20 move down, a $30 move down for you to 100% fully double up your money. You understand what I'm saying? You can do this intraday and catch like 4 candles on a $3 move on spot. I done seen it with my own 2 eyes, and if I'm lying, I'm flying. I'll put the gains right here. You understand what I'm saying? We're not doing no capping around here in Jug Rich Trade. So let's just go to another example, man. So as y'all can see, let's say we wanted to take a trade on this day and we was watching in pre-markets like, okay, it held this support pretty cool, man, pretty cool, right? Now let's see where it makes resistance. It runs up, gets smacked down off of here. Now once it bounces up and goes to retest this 575.5 area, right, we could get into what's called a rejection play. We seen how the sellers came in the first time that it got there, right? We seen how the sellers came in. So we could say to ourselves, okay, let's enter a position after it hits this level, a short position, because I believe that the sellers is going to come down and smack this thing down. You understand what I'm saying? Just like they did right here. So we would get into puts at resistance to maximize our profits, man. And the lower this thing goes from our entry, the more money we make. That's how stock options works. You understand what I'm saying? And this is just known as a simple rejection play, man. The same thing with to the downside. You see how at this key level of 572.5, right here, make sure y'all following along with me. At this key level of 572.5, we seen what is called a hammerhead candle with a long wick to the downside. All this means is the sellers tried to run it down, but the buyers instantly brought it back up. And that could be a sign of a bounce at this key level where consolidation has started off of market opens. You understand what I'm saying? So me seeing this candle, I could have waited to see if the next candle closed lower than this candle right here. And if it didn't, I could have entered calls right here, man, scalped them for a quick 1-to-1 risk to reward ratio, put my stop loss right under this candle's price action and rode it to where it retested the resistance. After I seen it wasn't breaking resistance, I could have sold for quick profits. And this is just simple ways how you can double or even 50% your money in the stock market. You understand what I'm saying? So now let's go to another day, man. Okay, let's go to this day. Let's say we wanted to trade the market on the 5th of November. You understand what I'm saying? And we was doing the analysis and looking at, always look to the left when you're doing your analysis, man. What happened the day before? What happened even days before? Where has levels been getting held? So we could say, okay, wham, bam. We want to put an alert right here because that's support 1. You see 1, 2, 3 rejection candles off of it. That's support 1 or a key level. And the lowest it went, man, support 2 is at 568. So we could put an alert right there. And then we have another level where it started consolidating that heavily at 571. Wham, bam, hold on. And then the roof in pre-markets and off market opens was 573. It ain't gonna let me put an alert on that, but just remember this 572.5 level to 573 area, right? Now, as you can see, it broke this first key level with heavy momentum off rip, right? Now, we don't like to get faked out. We also see that there's resistance right here. If you look into the left, right? If you come in over here, looking to the left, we see, oh, it might get smacked down from there, right? And it had a slight reaction. It had a little pullback. But what did it do? It bounced off of close to the EMA on the 5-minute, and then it kept going. This candle right here is our confirmation to get into calls. Why? Because it popped the top on this, man. It popped the top on this resistance. So this is called a breakout pattern. So we just going for a simple continuation. Enter calls right here. Hold on. Let me put, we would enter calls right here on this candle after we see the buying sentiment is still there and it didn't retrace it down, and put our stop loss right under these candles. You understand what I'm saying? Now, on this specific day, SPY had 250. SPY had a $4 move up, and this is all the way. So you plan a contract with 0 dates, I can promise you, you made 200% on your money, man. So now these are hypothetical examples, right? Let's go to some trades that me and the Discord took to bankroll last week, so y'all can see this in real time, man. So let's look at a rejection play that I took on the 13th last week, man, where I caught 280% in the span of like 15 minutes. It was crazy. I'm gonna put the gains right here. So again, y'all know we're not doing no capping, man. Now, what was my analysis and why did I get into the trade? What was my rationale? I have a area right here. What does it say? Start of sell-off zone, man. So sometimes when you, especially when you're playing with volatile stocks or ETFs, man, it won't always be a specific straight line that is resistance, man. And when it's more so rejecting off of an area, it keeps hitting in between the 25 to 50% range. That's when I'll chart a resistance zone and a support zone, man. So as y'all can see right here, I'll put a resistance zone right here, and it's held up on this day, got smacked down on this day, and got smacked down in pre-markets almost at that resistance point in pre-markets on the day I traded it, man. So it was very volatile this day. I'm like, all right, I'm gonna be patient, wait for my entry, and I'm so glad I did, man, because boy, that's all I'm gonna say, man. So it was nearing the end of the day, man. I saw SPY consolidating up here. I'm like, dang, one time, hold on. Look at where the crosshair is at, man. 1 rejection candle, 2 rejection candles. I'm like, all right, if it can't go below its top on the 3rd one, bro, I'm in puts. Because I know by that 3rd one, it's going to sell off mad heavy, you feel me? The buyer's going to get super wiped out, which is exactly what happened, man. So we entered puts right here. This is another rule of thumb I want y'all to know, man. Never cop calls near resistance until it breaks and holds, and never cop puts near support until it breaks and holds, man, because you can easily get cooked on fake outs. So now, boom, after I seen it started rejecting, man, we caught puts right in their resistance and rolled this baby down. Y'all see how it only took this thing to go from 599 to 596.8. 597, because I really didn't sell it at the complete bottom of it. I sold it when I started seeing signs of a possible rejection on this inverted hammerhead right here. I sold that thing, man. We ain't wasting no time. I'm Mr. See profits, take profits. You understand what I'm saying? So anyways, a stock doesn't have to have a $10, $20 move. It doesn't even have to make a double move down or up for you to double your money with trading options. And this is why I say trading options is one of the best ways to leverage your money in the stock market. You understand what I'm saying? Now we scroll over. I'm gonna give y'all another example before I get into the 2 stocks that I want y'all to keep on y'all radar, man, long term. You understand what I'm saying? So now on this day, I really played SPY all day on this day. I just have the play that I called out in the Discord charted right here, man. And let's see, why did I call this play out? Now, I had a key level right here, man, where it says took minor hits. You understand what I'm saying? And after this level had got broken, After it got broken right here, y'all see how it started consolidating, man, and it came back up. Now, it came back up, had a pullback because why? Look at the RSI. It was oversold on the RSI, and typically when things get oversold on the RSI, it's going to have a minor retrace up, a minor pullback in either direction. Whether it's if it's oversold, it's going to have a minor bounce up. If it's overbought, it's going to have a minor pop down. You understand what I'm saying? Because it's just they just feel like it's just going too crazy. You feel me? This jank was getting slammed all day. So after it had its popped up, I said, okay, is it going to reject at the same spot that it gave these two big rejection candles at, man? Y'all see how these two candles right here have these long wicks on them? I said, okay, if it does start to reject, I'm going to hop in puts for a quick 2-to-1 risk to reward ratio, put my stop loss above this candle, and put my take profits below this area. I was really going to take profits here, man, but I just kept riding the trend down and then sold it when it started consolidating, man. And this is known as a simple break and retest a key level and then get slapped down. This is a break and retest pattern, man. So just keep this on y'all radar while y'all trading next week, man. I hope that y'all wrote all of these things down because they are very important. And without further ado, let's talk briefly about two stocks that I want y'all to keep on y'all radar for a major pullback. And y'all need to be entering long calls as soon as they have this major pullback. You understand what I'm saying? Now, the first one I want to put on y'all radar, man, if it's not already on y'all radar, it should, because we've been talking about this one for a little minute ever since it was down at $30-something, $28, man. It's PLTR, ticker symbol PLTR, man. And if you don't know what this is, it's a heavily AI related stock that has just entered the SPY index, and it's just been announced that they may be entered into the NASDAQ, man, the QQQ, which is great news for them. And they're also on the cheaper side of things, man. It isn't like an Nvidia that's already kind of overextended, or OD amount of hype is already built around it. You feel me? Now, as you can see, this thing is overbought on the daily. Now, what did I just say this means? This means that there is going to be a pullback soon because it's just too overextended. You feel me? It's been going too crazy. If you look at this, even in this little last week of it running up, right, ever since it had its last earnings, it went from $40 to $65 and bust through all-time highs, man. All-time highs was at around $45. So y'all see it broke through that and just kept going. Now, once it comes back down and retests $45 to $40, man, even if you can get in at $50 and start averaging in, I'm telling you, this thing has the potential to be the next Nvidia by next year, man, due to all this news. Y'all can go do the fundamental analysis for yourselves. I just want to put it on y'all radar, man. And then the next one I want to tell y'all about is ticker symbol TSLA, man. And they already having a pullback, but I want to get this one as soon as it retests the $300 area, man. I will start averaging into long call options on this, man. And it's because the news that surrounds Trump and Elon Musk, man. If y'all haven't been watching the news, man, Trump just got in office. That's why crypto is going crazy. And if you know, you know. You feel me? Elon Musk and Trump is like this. He just put together the Department of Government Efficiency, which acronym is Doge. Elon Musk already has Dogecoin, which is why Doge has been shooting and skyrocketing. And aside from that, man, Tesla is looked at by most people as just a car company. And when the market realizes that it's not just a car company, it has a lot to do with where AI is going, where chips are going, you feel me, with the robots. You understand what I'm saying? This thing is going to pop all-time highs, I feel like, or get back to all-time highs within this next year to year and a half, man, or half a year, I mean, excuse me. So just keep this on y'all radar and make sure y'all get in where it makes sense at. Don't buy it when it's overbought. You understand what I'm saying? Like I said, I will start averaging in at 300, man. I feel like 280 is probably the next floor, or when it comes down to fill this gap at 250, that's probably the lowest it's going. So if it comes down and retest there, please get long call options and thank me later, man. And without further ado, that's all I gotta say to y'all today, man. Make sure y'all hitting that like button, hitting that subscribe button, man. Yapping in with the Discord, and the money team gonna see y'all soon, man.